Okay, good morning. Welcome everyone to our weekly Forex Forecast. And today we are looking at preparing for the week of June 17th to the 21st. But before we dive in here, would like to wish a happy Father's Day to all the wonderful dads out there. I know being a parent requires a lot of work, and my father friends here, you guys sometimes do not get the same amount of appreciation for all the wonderful things that you guys do. So I do want to take a moment here to wish all of you happy Father's Day. All right, so let's dive in now. Of course, a disclaimer before we get started, trading is a risky business, so please be careful. Especially right now, markets are volatile, so we want to be very careful with our position sizes and the amount of risk that we are taking. All right, as usual, we'll start off by taking a look at our calendar here. So for this week, we're looking at, all right, so coming up here, we have, actually let's go to the news first. Coming up here, we have ECB President Draghi speaking once again. And then we have monetary policy meeting minutes here for Australia. So Australia has cut rates previously, and now if their commentary is still dovish, so if they're concerned about the state of the economy, and especially the trade wars here, the trade wars will have a big impact on Australia, because when US and China are having a fight, that will have an impact on Australia, because Australia is a big trade partner with China. So they export to China a lot. And if China is not doing well, then Australia will not do well either. That's why New Zealand and Australia are concerned about the trade wars as they relate to China. And both of those countries, central banks have cut the interest rates. So we'll keep an eye on that. Right now, because of the interest rate cuts, Australia is more dovish, so it's been dropping. And then we have President Draghi speaking once again. We have Bank of England, Governor Carney speaking. We had that last week as well. Now, on Tuesday here, we do have core CPI here, inflation numbers, or final CPI and final core CPI numbers for Eurozone here. These numbers right now are very important because central banks are changing their monetary policy. So we have seen that the central banks, or some of the central banks, were starting to raise rates. Now they are completely changing direction. And if these data numbers do not come, or data points do not come out good, then that just gives it more reason, or gives the central bank more reason to change the monetary policy. So ECB has talked about changing the monetary policy for the Eurozone. So if the CPI numbers do not come out positive, that will have a negative impact on the euro. Now, to this point, we did have some positive developments that happened for the US dollar last week. One of the big things was the CPI, or the inflation number. Everybody was expecting it to be negative because so much of the data has come out negative for the US dollar, and that's why people were expecting the CPI numbers to be negative. But they were okay. They kind of came in line with expectations, and that actually gave US dollar a boost, because everybody was so negative. So all the positioning was not right. And that's why it went up on the CPI numbers that barely met expectations. But if the numbers drop, like I said, it gives central banks another reason to change monetary policy and cut rates. So same thing here with the Eurozone. If the numbers are negative, it will have a negative impact on euro here. And then again, we have Bank of England, Governor Carney speaking once again. On Wednesday here, we do have CPI numbers for UK here. CPI numbers for UK have actually been good. All the numbers, or most of the numbers that we have seen come out of them, they have been quite close to expectation. So generally, the central banks want the numbers around 2%, and they have been fairly close, even though it missed by a bit, missed the forecast by a bit, but overall they have been very close to 2%, and last number actually jumped up from 1.9 to 2.1. But if this number starts to turn around, that will have a negative impact on British pound there as well. And then we have Canadian CPI numbers coming up. Again, if they come out negative, it will have a negative impact on Canadian dollar. And again, ECB President Draghi speaking. On Wednesday, though, the key event here will be FOMC. So as we have sort of seen in the markets, US dollar became quite volatile over the last little bit since Powell said that bank is open to cutting rates. And since then, we have seen the US dollar drop. It did go up in last week, and we'll talk about that in just a moment. But it has overall, the tone has been negative for the US dollar and positive for equity markets because of Fed's willingness to cut rates. So this will be an important event here for the US dollar. Now, it really depends on what the Fed says. If they are dovish, if they are concerned, because they have expressed concerns about trade wars. So if they are concerned about trade wars and the impact it will have on the US, then their outlook will be dovish. And as a result, the outlook for US dollar will be dovish as well, which means the US dollar can go down. Now, before, a lot of people were expecting an interest rate cut here, but I'm not sure if Fed is ready to cut rates at this point. I think they probably still want to see how things go, and we may see that interest cut come later in September or something. But again, if they do cut rate, that will be negative for US dollar. Like interest rate cut will just have an immediate negative impact on the US because it's such a big monetary policy shift. Before they were raising rates, now they're cutting. That is huge. So if they do cut rates, just be prepared for that. If they don't cut rates, it will not have any impact. But if the language is dovish or negative, that will be negative. Now, if somehow, for some reason, they talk positively about something, it could have a positive impact on the US dollar. So that's kind of what we are looking at going into the FOMC statement. But I do expect volatility during the statement. So leading up to it, I think we could go sideways, but it will be a volatile event. So be prepared for that if you're trading the dollar crosses. And then we have GDP numbers for New Zealand. Again, these will be important. We have Reserve Bank of Australia, Governor Lau speaking. Now, this is the speech after the monetary policy. Australia doesn't do the speech right after, just like here we usually see we have FOMC statement come out and then 30 minutes later there's a press conference. On the other hand, Australia, we usually see the monetary policy meetings come out here, and then 2 days later, we see the conference. So they do it slightly differently. All right, so that was that. So huge week here. And then we have monetary policy for Japan. This one here will be important again because Japanese yen, unfortunately for Japan, is actually impacted by everything that's going on. If there's a risk on environment or risk off environment, Japanese yen gets impacted, even though they have absolutely nothing to do with what's going on. So keeping that in mind, Japanese Bank of Japan has to do something about the monetary policy or say something that will keep Japanese yen from being the victim of everything that goes out in the world. And because of that, Bank of Japan may try to manipulate, or they may try to do verbal intervention. So if Bank of Japan starts talking, well, they have been talking about expansionary monetary policy, but if they start taking aggressive action, that could be negative for Japanese yen, because right now, Japanese yen is very strong because of the trade wars. But this could change the direction. So if you're trading Japanese yen, be prepared for this. We could get some volatility depending on how strong their language is. But because they have been saying the same thing, oh, we're going to change the monetary policy to make it more expansionary, they're already in the negative interest rate. So they can't, well, they could cut more, but that would not make sense. But again, if they do take some actual steps, that would be negative for Japan. So watch out for that. And then we have retail sales number for the British pound here. And after that, another monetary policy. So this is the fourth bank that will have their monetary policy statement this week. So do expect tons of volatility in the market. Regardless of what you're trading, something will be impacted by these announcements. So far, Bank of England has kind of kept their policy the same. They did raise rates previously, but at this point, there will be concern, same concerns that other banks have. So if Bank of England starts being dovish or they start expressing concerns about the economy, it could have a negative impact on the markets here on British pound. So yes, there are lots of red news, not just red news. This is a different type of news. So we have monetary policy statements. And because central banks are changing their monetary policy, this can be a very, very volatile week. So just be prepared. And then later on that day, we have Bank of England Governor Carney speaking again. Going into Friday, we have PMI numbers out of the Eurozone. PMI numbers are leading indicators for retail sales and GDP. So these numbers will have an impact on euro. If they are negative, it just makes it or gives central bank, ECB, more of a reason to change their monetary policy. So negative numbers at this point will have a negative impact on the euro. And then we have retail sales numbers here from Canada, and then PMI numbers here for the US. But overall here, the main events that are happening are the central banks from around the world. We have Australia, we have ECB, I believe. We saw that we have FOMC, we have Bank of Japan, so no ECB, Bank of Japan, and then we have pound here, so Bank of England. So 4 central banks. Like I said, smaller position sizes will be important this week. All right, so let's take a look at, actually, another thing I wanted to mention. This is follow-up from last week. So what happened last week? Last week, we saw that US dollar and Japanese yen and the equity markets all changed directions. Now, they are all correlated to each other. That's why they tend to move together. So what happened? So first of all, like I said, the CPI numbers for US dollar, US came in positive, but that happened towards the end of the week. Market had changed directions prior to that. The biggest reason for that was because of there were rumors that that China and US are actually moving along in their discussions. Now, then we saw tweets from President Trump that basically gave the different impression that they were not actually moving along, and they did not still have plans for meeting in Japan at the end of this month. So that was one thing. Then also their US put out messages saying that the tankers had been bombed by Iran. And now that is a conversation, or that's the comments that could lead to starting off a war. When the wars happen, US dollar goes up and Japanese yen goes up, equity markets drop because unless they're defense stocks, all the defense stocks tend to do well in war because, of course, they're making weapons, but everybody else, everything else goes down because it is such a big threat, right? So keep that in mind. If we hear more comments in regards to war, that will be positive for the US dollar, but negative for the equity market. So just keep that in mind. And also there were comments that suggested that Fed may not be raising rates. So again, we have, that was another thing that came out. So overall, market did change directions quite drastically. And like I said, we have lots of central banks coming out this week. I expect volatile markets. And on top of that, we also have these other events. We have trade wars, we have the threat of war, and all of these going on in the markets all together. It makes for very, very volatile markets. So just want to, really kind of drill that home. All right, now that I have done the whole doom and gloom, let's look at the charts. But it's just that we have to keep that in mind as traders, because these things have a direct impact on our account, and understanding these things is very, very important for us to actually stay in the markets and survive the markets. All right, so we'll start off with our chart analysis with euro dollar. So last week we had a very strong candle, but we had talked about this. This is a strong support resistance level from technical perspective. And then layering all the stuff that I just talked about. So that's what we have. So we saw price drop from here. So one, this is a key support resistance level. Secondly, we have other dynamic stuff or other stuff going on in the market that makes the markets dynamic. So this is the level the price dropped back from. So it's still trading in a range, and we've talked about this ever since this candle here. Price has been trading in this range, and we are still stuck in the range. So price has basically reversed at the top of the range here. Now, what I would expect is a further move back down towards the bottom of the range. So I would look for some pullback here. 1.1280 is the potential level for a pullback, and then I'm looking for a drop. So bias is to the downside here for euro dollar. Let's take a look at pound here. British pound also dropped. This one had also been trading in a range, so it stayed below that. So it went right into that support resistance level and then dropped from there. Now we have a bearish engulfing candle, so bias is bearish, just like the euro here, looking for price to drop further. So let's get rid of some of our lines here, so we can see where we are going. Okay, so in terms of the pullback, so bias is to the downside. In terms of the pullback, we could see a pullback into 1.2680 or potentially into 1.26 or 2620. So I'm going to leave it here at 1.2680 and see if it does pull back to that much. But like I said, volatile market conditions this week. But the bias is to the downside, and that's the move I'm expecting, a bit of a pullback, and then a drop. The target here will be 1.2470. So bias is to the downside for pound dollar as well. Aussie dollar here, we are looking at a big bearish candle. This was also into support resistance as well. We did have a big bullish candle, but things have reversed here, things have changed. So in terms of the pullback, one thing to keep in mind, we are right into the support. So just like this candle, see how price had pulled back from there. So just be careful with that one. But bias is to the downside, and target here will be 0.6750. And in terms of the pullback, I'm looking for a potential pullback into 0.6920. And then bias is to the downside. 0.6750 is the target to the downside. So bearish bias here for Aussie dollar. New Zealand dollar, a huge drop here for New Zealand dollar. New Zealand dollar was also into support resistance level from technical perspective. But just from fundamental perspective here, New Zealand dollar is weak just because their monetary policy has changed. Reserve Bank of New Zealand cut rates, and that has given it this bearish bias overall. So bias is still to the downside. We have a bearish engulfing candle here. So looking for a further drop. In terms of the pullback, we could get a pullback into 0.6520 level, or maybe potentially a little bit higher into 0.6550. Those are the two levels I would keep in mind as for pullback. And then looking for a drop, the target here is 0.6420 is the first target. And then we need to zoom out a bit in order to find the next target here, which will be 0.6350 level. And this one, my bias is just to the downside here, but I think there will be more volatility. So this one can also go back and forth. So what I'm looking at here will be 0.6420 as the first target, 0.6350 as the second target, and then 0.6220 as a further target to the downside. But for now, bias is to the downside, and these two will be the targets. All right, next one, dollar CAD here did a big drop, and now it's back into that range that it's been trading in for quite some time here. So we have a big bullish candle here. Now with this one, bias is bullish. It's back into this range that it was trading in for quite some time. With this one, I would say bullish bias here. But again, we have tons of, we have FOMC, which can change things here for US dollar. But this is the move I'm looking for here. Especially if there is the talk of wars and all of that continues, US dollar can benefit from that. So at this point, looking for a pullback into 1.3350, and then basically looking for a move back into top of the range here at 1.3530. So bias is bullish for dollar CAD. Euro pound here, this one hasn't done a whole lot. It's stuck in that little range it's been trading in. It's into the support resistance level. So last week we were looking for it to go up. It did go up, but it has turned around from the support resistance. So at this point, I would say bias is bearish, and I will look for a bit of a pullback and then potentially a move back down towards 0.8800. So not my favorite one to trade at this point, but looking for a drop in euro pound. Euro Swiss franc here, this one has also been all over the place. Euro was strong, but now it's dropped. And in terms of our targets here, so the bias is to the downside. We have a doji, we have a large pin on the top, which shows a rejection. So I'm looking for price to drop. So before that, we could get a pullback into 1.1220 level, and then, or even potentially all the way to the top. Sometimes that happens when we get dojis, but bias is to the downside. 1.1100 will be the target for Euro Swiss franc. Pound Swiss franc here, this one is sort of trading in this range here for the last 2-3 weeks, but we have a pin bar, which means bias is to the downside, and looking for price to drop further here. And in this case, again, we could get a retest of the high, but the bias still remains to the downside. 1.2450 will be the target. 1.2450 is the target to the downside for pound Swiss franc here. Move it down slightly. There we go. Okay, so pound Swiss franc bearish. Dollar Swiss franc here, this one is pulling back. So US dollar, like I said, has been strong. Or it changed directions because it picked up strength, and bias here is bullish for this one. But we are very close to that support resistance level, and we've got FOMC coming up. So with that, there are some people that are still expecting Fed to cut rates. So this is why it's important, because we don't know what will happen. If they do cut rates, US dollar is going to basically take a hit. So just keep that in mind for all the US dollar crosses. With this one as well, right now, this one is bullish, but like I said, it could just turn around and do one of these. So just be careful. But in terms of my base case scenario, I'm looking for a pullback and then looking for it to go into 1.0020. If it does make it through this level, then it could go to the next level, but be very careful right here because it could do that. So that would be my little warning there. But bias for now is bullish. First target is 1.0020. If it does make it through, then we're looking at 1.0097. So bias is bullish for dollar Swiss franc. Pound yen, we saw a drop in this one as well. Price did pull up. And then we saw right into this resistance, we saw a drop here. So with this one, we have a bearish engulfing candle close now. So bias is bearish. 135.50 is the target. And then we have 133 as the second target, 133.20 as the second target. So bias here is bearish for pound yen. Euro yen here, this one also dropped. We were into this support resistance level, but like I said, things have changed in the market, so bias is bearish. So anytime there is a risk in the market and markets go into risk aversion mode, it is always good for Japanese yen. With the wars and stuff, Japanese yen tends to do better. So does Swiss franc. So we see Swiss franc and yen crosses drop generally because Japanese yen gets stronger. So with this one here, Euro yen biases to the downside. So I'm looking for price to drop, looking for a pullback into 122.20 potentially, and then a drop from there. And then we go into the support at 120.80. But then if it does manage to go through, next target would be 119.20. So my bias here is to the downside. Again, we have to watch out at 120.80 because that's our strong support level. But I am looking for, I'm bearish on this, looking for a drop. 120.80 first target, 119.20 as the second target. Dollar yen here, this one hasn't really done anything. This is our daily chart that I use for my daily market analysis calls that we do. But as we can see here, it's slowly pulling up, but it hasn't done anything. It's been trading in this range. So looking at our weekly chart here, we have a bit of a move to the upside, but it is still neutral because it's trading in that range. Last week, this was neutral. This week, it's neutral as well. If the US dollar stays strong, we could see it go higher into 109.50. But overall, this is neutral. It could go in either direction. And what it could just do is do a bit more of a pullback here and then drop, because overall here, the move is to the downside. So if you take a look here, we saw a drop, a pullback, a drop, a pullback, and then we could see this type of a drop. So just keep that in mind. Overall move is to the downside. The trend is to the downside. And we could just see a drop from this level here. But actual technical setup that we have here is neutral. Aussie yen, this one is also bearish. This was a great trade last week here. Now bias is bearish here. We have a nice bearish engulfing candle close. It came right into that target. So now looking for price to drop further. It does have a long way to go here. There isn't a whole lot that's in the way. This was the previous flash crash here. And let's see. So this is, yeah, that's a good target here. In between, though, there may be minor targets. So let's go back. Okay, so bias is bearish in terms of a pullback. We could get a pullback into potentially into 75.20 level or maybe even into 75.50, but it is bearish bias and looking for price to drop further. So something like this. And first target is 73.20 and then 72.50 will be the second target. So bias is bearish for Aussie yen. Same thing for New Zealand yen, a huge drop here. So bias is bearish. We have a huge bearish engulfing candle here. So looking for a further drop, bias is bearish. And let's zoom out to find some further targets here. And we are heading into some multi-year levels here. So we haven't seen price at 69.40 level here since 2012. So just shows that we have to be careful with this stuff because there may be support or there may be buyers sitting there. It is support, but there may be buyers sitting there. So here bias is bearish in terms of a pullback. We could get a pullback into 71.20 level. Or it may just be a shallow one into 70.80. But either way, looking for a pullback and then a drop. The move, like I said, is this is the move I'm looking for. So bias is bearish. 69.40 is the first target. 68.40 is the second target here. Bearish bias for New Zealand yen as well. All right, so CAD yen being our last yen cross here. This one as well went right into support resistance. We have a drop. It's not a bearish engulfing candle here like some of the other ones because Canadian dollar was strong. So US dollar was strong as well as Canadian dollar was relatively strong because oil actually was holding up. Oh, another thing to keep in mind, anytime there is trouble with any of the oil producing countries, price of oil tends to go up. So especially if the war starts, price of oil could go up if because of the disruption in supply chains for oil. All right, so with this one here, bias is bearish and looking for price to drop further. So we could get a pullback into 81.50 level potentially, and then a drop here. So first target here will be the bottom of this previous candle here, right into 80 level, and then we're looking at 79.50 and potentially into 79. So bias here is bearish for CAD yen as well, and looking for price to basically drop further here. So all the dollar crosses at this point are looking bullish, yen crosses are looking bearish, and all of that has to do with this whole trade wars and actual real war threat that we have at this moment. So let's move on to our commodities. Let's see how the commodities are doing in all of this. So here we see that price has pulled back in terms of our silver here. But so let's see, prices kind of stayed in this range here. So this is neutral candle in my perspective. I think it could go in either direction because what we have here is rejection at this level. So price could just stay above and then go higher. I would keep that in mind. However, there is bearishness in this candle, so we could see a drop all the way into 14.35 as well, and then potential double bottom here. So my bias right now is neutral for silver because gold and silver tend to do better, especially gold, when we have a threat of war. So keep that in mind. That could push it higher. But I think this one could drop further as well. So I'm neutral on this. I will wait and see how it does, but I'm looking for a potential drop into 14.65, and it could drop further into 14.35, but I think we will get that push higher here. Gold was bullish here. It did drop initially and pulled back all the way into this previous support resistance level. Now we have a neutral candle close here, and price went to test higher. So bias here is neutral. We have pins on both sides, small candle body, spinning top, so neutral bias. But like I said, keep in mind, when we have threat of war, gold tends to do well. Gold is also a safe haven currency, a safe haven asset, so it does well during this time. So things that do well during our times of risk aversion, or when there are problems in the world, will be your Swiss franc, Japanese yen, gold, silver tends to sort of, drag along, and bonds. And those are the things we need to pay attention to. But right now, bias is neutral. We could see it go higher. And in that case, the next target would be 1375.65, or it could come back into this 1321. So I would be looking for a reaction first before trading this. So if price comes into this level and holds above, then we're going bullish all the way into 1358, and then potentially higher. So just keep an eye on it before we go aggressive on this. Oil here, oil's actually been dropping. So this is our daily chart, but it was dropping and then it has pulled back. So it's been trading in this range here. So it pulled back, which made a dollar CAD drop, and then the Friday close wasn't too impressive here. So in terms of our weekly candle, this is what we have. So price has just been trading in this range for the last couple of weeks here. So bias here is still to the downside, but like I said, should the war start, it will push the price of oil up. But just based on technicals here, bias is bearish. I will look for price to go back towards the bottom of the range at 51, And if it does drop through, it could go all the way to 48. But just keep in mind the current stuff going on in the markets. So right now, this is bearish, looking for it to go towards 51. And only if it breaks through to 48. Otherwise, it could just go sideways here for a while because we've had a big drop and now it could just go sideways. Copper here, copper is bearish. Sorry, excuse me. Cough there. Okay. So this one is bearish. We could get a pullback into 2.63 level here. And then looking for a further drop. First target is 2.57. Second target here would be 2.53 level here. So bias is bearish for copper. Bitcoin, it's still looking bullish. Again, excuse me, I don't have the latest charts here because my charts do not update. But this is looking bullish. And just in general here, cryptocurrency is getting a boost here, especially because Facebook is launching their own cryptocurrency. So cryptocurrencies are kind of doing a comeback here. So that is good for Bitcoin. So bias here is bullish for Bitcoin. I will look for price to go higher into the top here, into 9,000 or even 9,100 level. So bias is bullish for Bitcoin. Okay, now we are looking at our equity markets. Equity markets, last week they were bullish. They went up a little, or the week before they were bullish. Last week they went up a little bit, but they did have a drop here as well. So right now we have an indecision candle for S&P 500. It could go in either direction. My bias here is completely neutral because I like to wait and see how some of the things that we talked about emerge before we, do anything about it. Right now, there's volatility and expect volatility going into this week here, into the upcoming week. Bias is neutral here. Now, we are very close to the high of the market. If the Fed cuts rates, equity markets will go up, period. So that's where we are at. Bias is neutral for S&P 500 right now. NASDAQ here did not do a whole lot. We have a neutral candle close for this one here as well. That's where we are. So bias again is neutral. This one could drop from here again. But like I said, FOMC cuts rates. This one is going up, but from technical perspective, I think we could see a drop. But we don't just trade the technicals. So neutral bias for that. For NASDAQ, everything is looking neutral for the weekly. So this is where the daily analysis will come into play. We'll have to take it day by day and see how it goes. DAX is also completely neutral here. It could drop from here, but again, there is that level right there, and it could go higher as well if rates get cut. Here, same thing, all the markets. So far, all the equity markets are neutral. This is completely neutral for FTSE as well. Let's take a look at Nikkei. This one's looking slightly bearish here. And we could see a drop. So I would say Nikkei is bearish. 203800 will be the target. But again, we have Bank of Japan. If Bank of Japan talks about expansionary monetary policy, that will be good for Nikkei. So for now, we just have to wait and see for the equity markets. Bias is neutral at this point. Okay, and there was a question about any update on wheat. Sorry, I do not track wheat. I have not been keeping, I'm not really keeping an eye on wheat. I just only keep track of things that really impact the Forex market. And that's why. All right, so there was a question, what channel do I use to get information about speeches, monetary policies, all of that? Well, so some of the channels that I keep track of, Reuters and Bloomberg, of course, because they are important for our trading, but also I like to listen to the audio feed. So some of the brokers have the audio feed. I would suggest going and taking a look at that, or Rand Squawk is the one that they provide the service as well. All right, so before we wrap it up, one thing that I would like to mention, if you guys are interested in doing this analysis, this type of analysis on a daily basis, I do offer a service where you can join. It's a Trade Vault service where every evening we do this type of analysis. We talk about what's currently happening in the markets and what the impact of that will be on our trading and how to position ourselves to benefit from that. So last week, even though the markets went in the opposite direction to our weekly analysis, but we were able to capture the profits because of the daily analysis, because markets are dynamic and they do change. So if you're interested in joining me on that service, you can go to this link. It's bit.ly/Trade Vault. And same thing as you get the spreadsheet with our weekly analysis, you will get a spreadsheet with the daily analysis as well, where I show you the what's going on in the markets, and I give you positioning. So let's take a quick look at the last one, if I can pull it up here. So weekly analysis we did on June 14th, for example. So there is our market direction. So you get this type of a spreadsheet from me. And as we can see, even though our weekly candles were up, my analysis was to the downside. So we were looking at things dropping, EuroCAD, PoundCAD, and this one, of course, is neutral for the markets, and markets were neutral. And then we had the previous day as well. We've been positioned to the downside. So the trading has been good this week because we were positioned to the downside here for euro dollar and for the yen crosses as well, and the markets were positioned to the downside. So anyway, we do this every single day, and you will get the spreadsheet that will give you the targets that I'm looking at, the potential pullback levels, very similar to the weekly forecast spreadsheet that you get. So you get at-a-glance information, as well as you can join me on the weekly analysis. So this is one way if you want to keep track of what's going on in the markets. You can follow this link, and when I send out the email, you will have this link, as well as if you are watching on YouTube, it will be in the description. So I would love for you guys to join me on the daily analysis. But that's it for me. You guys have a wonderful rest of the day. Enjoy the Father's Day. Hope you have a really wonderful Father's Day. And I will be back again with you next week. Bye for now.